Welcome back to this video. In this video, we can be considering what we refer to as an important aspect of trading system. So we shall be looking at 15-minute charts. What is important? What are the reasons that we use 15-minute chart in forex trading? Why is 15-minute chart so important to our trading decision? Now, if you look at this chart, I am on WTI, which is the United States crude oil chart. Now, we shall be looking at how we consider 15-minute chart in trading. Now, there are three basic things that we look at while trading 15-minute chart. Why personally, what I use before I use 15-minute chart to trade. Number one is the crossing of the 240 moving average. Then number two, I am looking for an engulfing pattern in a bigger time frame to be able to take an entry in 15 minutes. And I will also be looking at, which is number three, I'll be looking at the stochastic of my 15 minutes and that of 4 hours to speak the same thing before I will get an entry to enter a trade in 15 minutes. Now, if you look at this chart from here, look at the chart from here. Now, you will agree with me that the prices has been having a series of problems around this place. Basically, the prices have been having serious issues around this place, and while they are having that issue, they kind of form what I refer to as a shopping candle around here. Then after the shopping candle, then around this place we have a breakout. Now, what am I interested in this very scenario, that is in this 15-minute chart? What am I interested in? What am I looking at? Those are the things I want to bring out from here. Now, if you look at this place, if you look at my chart from here, you will agree with me that the price around this place is basically, that is around this place we have what we refer to, that the price is what has crossed down the 240 moving average, and that is what we refer to as an engulfing pattern. Now, because we are having a pretty good downtrend, then what are we going to do is for us to begin to look for an entry. Now, how do we get a perfect entry using 15-minute chart as our entry? Now, like I have told you, I don't use 15-minute chart alone to take my trade. I use various forms of work, of different time frame to look at my trading technology. Now, if you look at this place, if you look at 1 hour from here, you will agree with me that the stochastic of 1 hour and that of the crossing of the 15 minutes is actually on the same var. That is, they are moving in the same way. If you look at this place, now let me take this out a little bit. Now, if you look at this here, that is stochastic from here and that of 1 hour, they are speaking the same thing. Now, if you also look at this very place, this very area, let me magnify the chart for you to be able to see clearly. You will agree with me that at this very junction, that is what we refer to as an engulfing pattern. Now, this two scenario, that is the two situations that we have around here, which is here and this very place, is giving us an assurance that the price will move. But this is not enough to get an entry. Now, for us to get another entry, is for us to move down, for us to get better information, is for us to move down to 4 hours. Because I have told you that we are looking at our trading from where? From 15 minutes. They want to see now what the price cross at 15 minutes, what will happen. These are what we want to look at. But in this very situation now, we are looking at a situation whereby the price has actually crossed. Look at it from here, the stochastic of 15 minutes and that of 1 and that of 4 hours. They are speaking the same thing. Now, why is it that 15 minutes is so important in taking an entry? Now, let's go back to 15 minutes. Now, here is my 15-minute chart. If you look at this place, here is my 15-minute chart. Now, I want to tell you immediately we have our 240 moving average crossing down in 15 minutes, and we have our 1 hour stochastic is moving down heavily, and we also have our 4 hours and that of 15 minutes stochastic are speaking the same thing. I want to assure you that we are going to have a run more than 24 hours. That is, we are going to have a run towards that direction for more than 24 hours. And this is exactly what has happened around this place. If you look at this place from here, look at it from here, we have our stochastic then crossing down and the price moving below the 240 moving average. This line that you have here is the 240 moving average. The line that we have here is the 240 moving average. And as soon as the price crossed below the 240 moving average, then what do we have around this day? We have a serious situation around here, and this is telling us that the price continue to do what? Continue to move down around here. Now let's calculate the time from here that the price has used to descend. Now from here we are going to calculate the time, and we are going to calculate the numbers of candles. Now basically we are having 99 candles around this place. Now since I am having 99 candles, I want to bring out my calculator for us to eventually calculate what is the time that we are having to get the information that we need. Now if you look at it from here, we have 99 candle times 15. Now let's get the time, which is 1,485 minutes. This is what we have. Now we want to get an hour, so we have to divide this by 60, and this is giving us 24 hours, which is almost 25 hours. That's what we have to be able to do what? To be able to have this situation around here. Now, what am I bringing out? What I'm bringing out in these scenarios is that I am telling you that whenever we have this situation, that is, we have this situation that we have here, that is, we have the price crossing down around this place, it is telling us that there is going to be what? There is going to be an heavy move towards that direction. And not only that the price is going to move for a very long time towards that direction. Now, probably it's going to move for 24 hours, even for 2 days, which is 48 hours. And this is exactly what we have in this scenario. Now, if you look at this scenario from here, look at it from here. What we got from here is that the price moved. That is, the price moved and it run down to this area. And once the price moved from here, and it run down to this place, then we have what we have over 99 candles. So this candle is telling us that this system makes us to understand that we can stay in the market. That is, we can stay in the chart to allow the chart to breathe very well, using our money management system to be able to do this. Now let's go back to other day. Now let's look at the other day. Now if you look at this place, look at when the price around this place crossed. Now let's do a little bit of analysis from here. This is where we have the crossing of, this is where we have the crossing. This is where the price crossed. Now once it crossed, look at it, come back to the test failed, and look at the move. Now let's calculate the time that it moved from here. Look at it from here, look at the timing from here. So from here it moved for about 50. Now basically this is about 65 candle. This is about 65 candle. This move for about 65 candle. So when this move for 65 candle, then you calculate your 65 candle by 15. We do 15 times 65 candle to know actually. Now this is about 975 minutes divided by 60. Now divided by 60 to know the hours of time. This gives us 16 hours. Give us over 16 hours. And from here, look at what I'm saying. What I'm trying to bring out is that whenever we have this kind of move, that is, whenever you have the 15 minutes that the price is crossing the 240 moving average, the 15 minute, and there is an agreement between the stochastic of 1 hour, which eventually what we have around this place. Look at it from here. This is what I'm saying from here. Look at it from here. We have the stochastic of 1 hour and that of 15 minutes speaking the same thing. Now let's go back to 4 hours too. Are they speaking the same thing? Yes, they are speaking the same thing. Then look at the every move that we have around this place. Now if I calculate my pips from here, let me calculate my pips from here. This is going to be a very serious pips from here. Look at it from here. This is giving me about 426 pips. 426 pips. So the essence of doing this is for you to identify, is for you to know that whenever we have a situation like this, that is, we have the 15-minute chart crossing the 240 moving average, and there is a corresponding agreement between the 15-minute chart and that of the 4 hour, that is the stochastic of both are speaking the same thing, then we are going to have a very serious direction, a very serious move towards that direction. Now let's begin to check one by one. What are those things that has happened in the previous days for us to see whenever we have this situation, what are the reaction of the prices. Now if I move back from here, let's move back from here. Let's see how this is working. Look at it from here. Immediately we have the cross from this area. Look at the cross from here. Look at it. Once we have the cross around this place, look at the move. This eventually move for quite a number of days. Look at it from here. Quite some numbers of days. Look at the move from here. This move about 117 candle, which is about giving us about 252 pips. That's what we have around this place, and this move for almost 2 days. Over almost 2 days. That's what we are having here. This situation move for almost 2 days. Now, if you are calculating this 117. Now, let's calculate 117 times 15. This is giving us 1,755 divided by 60 for us to know the numbers of. So this is giving us about 30 hours. It's giving us about 30 hours to be able to achieve those things. Now, why am I giving you this information? This is why I am giving out this information, is for you to be able to understand that whenever we have such crossing, that is when your 240 moving average has crossed and it has moved to a very good area, then you have your stochastic of 4 hours and that of 1 hour agreed together. We are going to have one. We are going to have a serious move towards that direction for a very long time. That is, this is the time that you need to allow your trade to do what? To breathe. You have to allow your trade to breathe. Even when you enter from here, look at it from when you enter from here. If you use a trailing stop, by the time it's coming down around this place, you are going to get what? It's going to take you out. You are going to make your money. Even when he got here, he still did what? He still rebalanced at 240 moving average. And what we have the move coming to this place. So for whenever you have the situation, whenever we have your 15 minutes is crossing the prices is crossing the 240 moving average, the 15 minutes, we also have a very serious move towards that direction. Now let's move back again. Let's see what are those things that we are looking at. Now let's look at it from here. Look at it from this place again. Look at it from here. From this very area. If you look at it from here, prices is going up. The price is crossing below the 240 moving average. And in that case, this is where we have this situation from here. Look at it from here. If I put my vertical line around here, let me put my vertical line around here, which is here, then we'll trail it down to this place, which is around this place. We'll bring it down to this place. Look at it from here, and this is going to give us well, this is going to give us 76 candle. But let's look at it from a bigger time frame. Let's look at where this trade agreed. To me, if I want to enter this trade, I will not enter from here. I want to see where the price will fall below the 240 moving average. Once they fall below the 240 moving average, this will basically be an entry. They are going to leave this trade for a day and come back during the time the market has closed, or I put a stop loss to, a target profit or a stop loss towards that move. Now let's go back to other. Now this is where we are having this move. This is what I'm talking about from here. Look at it from here. Look at it. By the time it's crossed, then they speak the same thing. The stochastic speak the same thing around here. Look at what we are. Look at the move that we have around here. It moved very astronomical. That is, it moved very in a powerful descending manner. It moved in a powerful descending manner. Now, if you look at it from here, now let's go back to 4 hours again. Look at it, 4 hours. 4 hours. It's already messed down. It is messy around this place. So 4 hours is messy around this place. Now, let me take this out for us to be able to get a proper analysis of what I'm saying. So look at it from here. So 4 hours has already messed down around this place. So from here now we got what? We got a perfect what? A perfect downtrend. That is the stochastic of 15 minutes, 1 hour, and that of what? And that of 4 hours are speaking the same thing. When they speak the same thing, what do you need to do? You need to look for the direction of what? Of your 15 minutes. It is the 15 minutes that will give you a basic direction of where the market will move during the time of day. Now, the essence of using 15 minutes is to identify where the market will move during the time of day. So these are the major way that I think one of the best convenient way of taking a trade during time of day. And when you are trading this system, you need to be conservative, because you want to trade this system for like 16 hours, or probably for like 30 hours, or for like 24 hours. So you need to do what? You need to inculcate the principles of money management so that you can be able to withstand all the whipsaw that we have in 15-minute chart. Now let's go back to 15-minute chart again. Now these are 15-minute chart. Now let's take for instance that after the cross around this place, that you take your trade and you begin to ride it to this place. Now if you want to enjoy this trade, what I expect you to do is to do what? Is to allow what? Is to give a perfect, is to allow the price to move. I think to give it time to breathe. Allow the price to breathe. Then you must inculcate principles of what? Of money management. So I'm going to come up with a lecture that discuss basic principle of money management with my system. Now let's go back again. I think we need to go back again to begin to look for those areas. Now, mind you, we are on WTI. We are on WTI, which is the United States crude oil. Now, we've analyzed this area. Now, let's go back again and see those areas that we have crossing. Now, look at this area again. If you look at this area again, look at when prices cross the 15 moving average. What do we have from here? We look for what? We see how the price did, how the price moved. Look at it from here. It moved for over 24 hours. Look at it from here. This moved for over 24 hours. Once it moved for over 24 hours, look at it. It moved for over 24 hours. Look at the move from here. So if I calculate from the top of this area, which is giving me 121 candles, 121 candles, and this is about 476 days. So if I'm doing a calculation, I want to know what are the timing. So 121 times 15, 121 times 15. So this gives us 1,815 divided by what? Divided by 60. So for us to get the hours of time, so this is giving us 30 hours. So it's giving us 30 hours. That is from here. By the time you get this information right from here, that is, you see the cross from here. After you go across, you look for your 1 hour stochastic.
Is this speaking the same thing? Then you also look for your 4 hours. Are they agreeing together? Now, if I bring, now let's go back and see what is actually happening from here. Now, this is the candle. Is the stochastic not yellowing up? It is yellowing up. Now, let me expand it for you to be able to get what I'm telling you around here. This is 4 hours. Even at this place, we have a very serious cross to uptrend. Look at it from here. The stochastic is yellowing up in 4 hours. So they are speaking the same thing. Now, the essence of using 15 minutes is to get the basic direction. So for you to know that, okay, once this has happened, once 15 minutes has, the prices has also crossed in 15 minutes down, and there is a change of the stochastic towards that direction, it is telling you that the market is going to move towards that direction for complete days, for complete hours. So with this information, I believe you should be able to get what I'm saying. Now let's look at 1 hour. Let's look at 1 hour. I'm still going back to 1 hour for us to see, because you must get this information right before you can take this decision. Look at it from here. The 1 hour is from here. It has been what? It has been yellowing up. Look at the yellow up. It has been yellowing up around this place. That is, they agree to what? To that direction that we have in our 15 minutes. So the essence of 15 minutes chart is to give you the information that where the price will go during time of day. Where the price will move during time of day. So I want to take your time, look at this video, and begin to do what? Begin to have more knowledge, begin to get more information, begin to look at how this system works. You cannot get it better than this. You need to understand how it works. So I want to thank you for staying to the end of this video, and I want you to subscribe to this channel. Hit the notification button so that when I release another video, YouTube you'll be the first person that YouTube will notify. So I wish you good luck, and I say thank you very much.